action and extreme volume, the volume being the key. He only recommends that you consider these trades during normal market hours and before 2 p.m. and to never hold these positions overnight. So let me go ahead and just switch the screen here and let's take a look at how these small caps were doing. Now, right up here in the upper left-hand corner, we have JDZG. We can see that the pre-market high was 375. We're not even sniffing this whatsoever. In the middle here, we have GWAV. Now, the pre-market high was 2267. And right here at 845, these are 15-minute bars, by the way. We can see that price came here, immediately popped up a little bit, and then turned right around. So if you got filled at this level, more than likely you were probably stopped out somewhere in this area, down about 25% or so. So that would have been unfortunate. But it did give a look like it was going to break out higher, and it turned around. In the upper right, QR8C, we can see that the pre-market high was 2222, not even coming close there. Let's see here. AKA 1746, nothing there. And ATXS, the pre-market high at $12.30, nothing there whatsoever. Up in the lower left-hand corner, this is just the SPY, just keeping an eye on the SPY. So we did see an opportunity on GWAV, but once again, after it hit our entry point here, it moved up a few ticks and then turned right around on us, and more than likely would have been a stop out. So let's go back and let me go ahead and share my other screen. Roger also shared with us what his pre-market stock watch list were, and on this one we saw that there were several shorts that he was looking at: DE, 4, CNH, BSX, CL, FI, AMT, and we did note that Flow and BWIN, those were shorts, and the reason they have an asterisk is they are definitely looking at A-line setups to the short side, so that's where I put that asterisk. On the longs, we noted that there were about, 8 of those there, and each one of those looking pretty decent. And once again, for those of you that were there during the morning session, as you know, Roger brings up the chart on each one of these and gives a very brief comment as to what he sees, why he likes them, specific areas to take advantage of. And you always know that Roger caveats things by saying, look, folks, if you take these stocks, just make sure that they meet your criteria for either going long or short, the way Roger has basically shared that information with you. And as far as his pre-market comments are concerned, we did note here that the markets failed to rally after Friday's loss. If you were with us yesterday on Monday, we note that Friday had a pretty big loss, and Roger was saying, hey, let's see if the markets are going to recover about 60% of what they lost. He said, because that would be a healthy retracement. Well, they didn't do that. They didn't rally. And we also noted that the bond and the gold markets were both up. And from Roger's perspective, he sees that as a pure and simple flight to safety, where money is leaving stocks, money's leaving Bitcoin, and moving more into fixed income. He also noted that crude oil was moving lower on recession fears. Once again, crude oil coming down, telling us that potentially a recession is sitting there. Now, from his perspective, what did Roger hope for today? He says, look, I hope the markets rally back into yesterday's levels and do not fall further into the 50-day moving average, because most of the markets are sitting there relatively close to the 50-day moving average. And Roger's going, we don't want to go down there or break through there. I'm hoping that things are going to come up and at least close at yesterday's levels. He also said, folks, we've got to be cautious. And even though the markets start selling off and you might be tempted to go short, don't go short unless you see a clear signal that the markets actually break below the 50-day moving average. Because if it does that, Roger straight up basically said, if the markets move below the 50-day moving average, he's going to look at taking some very strong short actions in the market. So these were the pre-market comments coming into the open.
Yep.
Now, once again, hello, hey there, Matt.
Hey, sorry, I was talking to Roger.
Oh, okay. So, once again, folks, as far as today's agenda is concerned, we got a bunch of great stuff to talk about. Roger's going to basically share how he uses a data miner to identify time spreads. And he's excited about this because we're right here at the beginning of earnings season, and there's some great earnings plays that are coming up. And he wants to be able to show you how he uses the data miner to identify some juicy opportunities for time spreads. Then we're going to take a look at the Alpha Zone Pro and how he derives key price and momentum levels on the Alpha Zone Pro. He's also going to share with us when he considers trading one dated options versus zero dated options. Because once again, as you know, with the Alpha Zone Pro, we're trading the SPY on one dated or zero dated options. He's also going to share what his favorite Alpha Zone Pro setup is and how to leg into and out of trades. And as a bonus, and this is going to be great, he's going to share with us a primer on using index futures to trade the SPY. So if you've got any questions during the presentation, folks, just type them in the chat window. We'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, the chat is open to everyone, and we do have some ground rules. Always be kind and supportive. Keep to the topic. No political discussions allowed whatsoever. And also, folks, keep your side conversations to a minimum so that the rest of us can focus on the information that Roger's going to be sharing, because after all, he's here to help give us an edge in the market and help us become more confident and consistent in our trading activities. And with that, let's say hi to Roger. Let's say hi to Matt. Say hi to the team. Hey, guys, how you doing?
We're doing great. How are you doing? Let me just turn my camera on.
There we go.
Yeah, I forgot the most important part. You know, got to get a little wind, tunnel, so it looks like we're actually in a thing going on. How are you doing today, Raleigh?
I'm doing just great, Roger. I am, and once again, really appreciated. I always enjoy coming to the morning sessions because it does kind of orient me towards to what to expect today. And in taking a look at things, Roger, I noticed, I'm now charting these small caps. We did GWAV teased us. It went right into that level, moved a few ticks higher, and then turned right around. So more than likely, if anybody got into that, they would have been stopped out on that trade. But the other stocks didn't come to that level, and
Good.
Those things can happen. But I just remember, the big statement that you made today was, look, guys, the markets are sitting above the 50-day moving average. And what we hope for is that they move into yesterday's area. And what we don't want to see them do is break below the 50-day moving average, because if they do, we're going to be talking about shorts.
Yes, exactly. And so far, let me just share my screen real quick. So far, we've done a fabulous job, as you can see right here, holding the 50-day moving average.
Yep.
That's the low right there. So these levels really do work. And these levels don't work because there's some magic levels. They work because a lot of institutions are using them.
Mm-hmm.
Hey, Editha, I think I got it right. John, how are you? Good morning, everybody, or good afternoon, everybody on YouTube and everybody on Zoom. Welcome, and welcome again. All right, so I do have a pretty interesting agenda today, but I do want to spend a few minutes talking about the market. We usually start off with whether there's any surprises or anything like that. Quite honestly, not really. I didn't know quite what to expect. Pre-morning today. But as soon as the market opened, just to show you, momentum levels have been just going straight up. I mean, we opened pretty low, but they've been just going straight up. I mean, literally straight up. So, and volatility is going down. Volatility now is almost at 20. And if you look at price data, you could see right here that we're already in yesterday's range. So we're
what you were hoping for.
Yeah. This is what I was hoping for. I was hoping for that we would come back into yesterday's range. Now the next step is going to be, can we get back above the same song and dance? Can we get above the 8-day EMA? The buying is going to start when we're over here, when we recover 60% of this bar, which will put us squarely above the 8-day EMA. Absolutely nothing has changed from my analysis. And it usually doesn't take one day. So the odds are what we're going to do is we're going to consolidate around here for a few days, and then we'll see if it goes down or up. But I think this is going to be a good support, and that's going to be a good resistance for the next few days. And I'm pointing to the daily chart right now. Okay? The fact that we couldn't get above this level is not a surprise. That's already quite a bit. But it's telling us that this tariff stuff is just overdone right now. Hey, Omar, good to see you. Telling us this tariff stuff is way, 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 way overdone right now. Okay? All right. So what I'm hoping for again is I want to see what happens when we interact with the 664, 665 level. That's going to be key for me. I'm going to repeat that because it's of great importance. I want to see what happens when we get above the 664 and a half, 665 level right here. If you're looking at QQQ, same thing. I want to see what happens. To be honest with you, I want to see us get above, not just above this level. I want to see us get above yesterday's high.
Oh, that'd be great.
That's what I want to see. Now, I don't think it's going to happen today. I don't think it's going to happen today. I think we've had enough of a push today, but Powell is speaking in about 15 minutes, and when Powell speaks, anything can happen. I'm just not seeing momentum. I'm seeing momentum being fairly positive, but we're only seeing 400 stocks trading. We went from a lot of stocks trading below yesterday's close to a few stocks trading above yesterday's close, but not enough for a run day. So unless we see something really switching here, it's not gonna materialize into anything. You could hear me okay, Raleigh?
I can hear you just fine.
Okay, good.
And so can Jerome.
Oh boy. Jason says in at 85, out at 415, $3,300 profit. You're welcome, Jason. Yeah, we're going to talk about AZP in a little bit, but first. And the bond market's open today, and the bond market isn't going any higher either. And by the way, if the market was to sell off, you would see bond market going higher. That's not because interest rates are going lower. That's flight to quality. Mm-hmm. And we're not really seeing flight to quality right now. So, hey, Deanna. So we're not seeing flight to quality, which we should be fairly stable here. Again, I just don't know if we're gonna cover that much ground to go from here all the way up to here. But look, anything is possible. We need to get above 603. 603 on the QQQ, and on the SPY, we need to get above 665.32. Anytime, that's why I said 664, 665, those are the levels you want to watch. It's crucial right now, over the next 48 hours, 48, 70, by the end of this week, it's crucial for us to get above this area. Once we're back above this area, we can breathe easily, okay? But if not, we're going to be kind of in this range right here, and that's not a great place to be. We call that the twilight zone because, well, you're in the twilight zone. Yes, Gitano, Robert Kiyosaki has been saying that for 20 years now, and he'll continue saying that for 20 years. He said it last summer. He said it the summer before. He said it summer before that. Anytime the market goes down 1%, he says it. Eventually, he'll be right, and then he'll write a book about it, about how he timed the market perfectly.
Predicted it.
Stop listening to people who have no track record making money in the market about the market. Robert Kiyosaki is a real estate guy. He is not a stock market guy. He knows nothing about the stock market. He's what I call a dude, okay? Stop listening to dudes for advice. You're not going to get the best advice, okay? Yeah, just he's just nonsense. Okay, all right. It's nonsense, and it really bothers me because people actually listen to this and they're like, "Oh, ooh, he knows something I don't." No, he doesn't. He knows nothing you don't. Nothing at all. Okay. Car salesman. Okay. Want to know what I really think about that guy? Exactly, Darren. That's right. Okay. Now, I want to share the screen. Matt wants to show us if we have any time spreads for tomorrow, and I want to show you how we changed settings on it. So you will get to do a couple of birds with one stone. This way, we'll see what all the stocks are reporting. At least I'll be able to mark them down. Go ahead, Matt. And yeah, I mean, man, oh man, Kawasaki. So what I did was is you remember how it said failure rate and it gave us the opposite. So this I just did the opposite. I wrote success rate because we're looking at time spreads. So you see, Matt, can you point your finger so you can choreograph what I'm talking about? You see the time spread analysis section, folks? See, it says ticker GE. Okay, you see the signal is weak. The signal is weak because you don't have the two components met. The two components is you need to have a high success rate, which we have, but the implied volatility next week has to be at least 40% higher than this week. And it's telling us that it's not. Okay. So that would say the IV ratio would be like 1.4, 1.5 there. You could see this week 41, next week 47. There's no way in hell that's 50% higher. So the signal is weak for a time spread. If there was a 50% disparity between the two, then it would say strong signal. Okay? See how we changed it to make it easy for you. So again, I just wanted to show you that. Now go ahead and go through the large caps, Matt, so we could see over the next 12 hours what is happening. Becky, this has nothing to do with whether you should get in or get out of GE.
So today at the close, I didn't see much. I don't really recognize any of these.
Mm-hmm.
Tomorrow, we have Bank of America, Morgan Stanley, Abbott Labs, Progressive.
Okay, looks like now Bank of America is when it comes out
Tomorrow.
tomorrow morning.
Tomorrow, yes.
Want to make sure it comes out tomorrow morning. Yeah. Okay, so let's write Bank of America could be a potential before the market closes today. And do you see, folks, the disparity, the IV ratio? You see how the signal is strong? You have a reasonable IV difference, and your success rate is 96%. So one of the stocks I'll be looking at today is going to be Bank of America. Okay. Any other ones? That's very good, very useful, Matt. Thank you. Any other ones? Make sure that the stocks you're giving me are coming out tomorrow before the opening bell.
They're not after the close. I don't know.
No, I'm not talking to you. I'm talking to people in the chat. Somebody just said Schwab, and I said make sure it's before the opening bell. Go ahead. Next one. Okay, so we got Morgan Stanley. Good. Oh, Morgan Stanley also fits. You're
There
going
we go.
too. Yeah, Morgan Stanley. See IV ratio 1.5. That's what you want to see. And success rate, you want to see success rate over 40%. See how it says signal strong?
Mm-hmm.
Clear, right? Real clear now. No confusion. And for the signal to be strong, you have to have both of the factors in there. So we got Morgan Stanley, Bank of America. Okay, what else we got? That's nice. We got two to choose from already. This is making my life easier, Matt.
And Matt, you're just going down off the major stocks that are scheduled to do pre-market earnings for tomorrow.
And we're gonna our next upgrade. We're gonna add that in here, so it'll know the dates and it'll give us like a top 10 watch list for time spread, so we can just click on them.
Ah, great.
But that'll be fantastic. Okay, so here, ABT. All right. This is all fantastic. I'm getting a bunch of names. You guys know how much work it would take me to find that success rate right there, that 92 point. Take me hours and days. This is very, very useful. Good. The change makes it very clear. Yeah, Sandra, it makes it much clearer. Much clearer. Any other one, Matt, that we need to look at? Or is that it?
Check Progressive. There's a few more.
All right, let's check. this is really like useful because I'm going to get a time spread out of this. Progressive, okay.
Strong. Yep.
Okay. This is really great, folks. This is really, really useful for me. Yes, this is like really, really useful. Sci-fi doesn't have options or what? Oh, it's not on there. It's not. That's not in there. Okay, I got it. It's probably not in there, Matt.
Yeah,
We're gonna have to put it in there. That's so, folks. The next step, maybe later this week or maybe next week, I'm gonna have Matt add another 500 stocks in there, so we don't just have the S&P 500. So we have like a lot more stocks. Yes, Max. Max, you really want to trade? Max says, been almost 2 weeks since an A-line trade. First of all, Max, does this look like an A-line customer service line to you? No. Number two, send me an email. And if you don't understand why we haven't had a trade on A-line this week, then you obviously didn't learn the first rule of the markets, which is markets first, markets first, markets first. Did you see the move in the markets last few days? Watching out for you, Max. Watching out for you. All right. Anything else, Matt? Out of the large caps?
No, I think that's it.
Okay. That's more than enough. So I got a lot to work with. I got BAC, ABT, MS, and PGR, correct?
Yep.
All right, I can
4
work
of
with
them,
those.
yep.
Folks, I just gave you 4 potential time spreads. You're welcome. You're welcome. I just gave you 4 potential time spreads, and I am going to take one of them in the pit today. I just need to, assuming it still fits my criteria after, I'm definitely going to do that. Yeah, the last thing you want me to do is to push trades. It's the last thing you want me to do. Because I could assure you, if you took an A-line last week, you would have been down right now. So you keep asking for trades. You get what you get. You don't complain, or no soup for you. That's how we work around here. I want to give you winning trades, not stupid trades. Anybody want losing trades? Losing trades, anybody? Losing trades? Anybody losing trades?
Losers make winners.
Losing trades, anybody? Does anybody want losing trades? No, I didn't think so. All right. Ay. Yeah, I mean, if you want losing, exactly, of course, obviously. Oh. Sorry, you guys cracked me up. All right. So with that in mind, let me give you some ticker symbols that I'm looking at right now, okay? Let me share my screen with you. Go ahead and stop sharing. Thank you for doing that, Matt. And now you'll be able to see the time spread section much easier. Would you please ask Deanna to cut that section out, Matt?
Yep.
So we could put it in the members area. Next few days, I'll run through some more stuff. Data miner, we'll just cut those out and put those in the members area. Right, Naples fan, right? I can pick my own losing trades. Exactly. Oh. I do, David. I do. But it's okay. I mean, this is normal. This is just FOMO. People have FOMO. They can't control themselves. Remember, one of the biggest reasons why people start trading in the markets is because they are told they have unlimited choices. They can do whatever they want. They love that. And then they realize if we do whatever we want, we're going to lose money all the time. All right. That was a time spread, Ed. That was a time spread.
And so, Roger, from that perspective, as we close the chapter on this, if you look at Bank of America, if that's something that makes sense to you later on this afternoon, what are you going to do? What is high level? What is that time spread?
I'll tell you exactly what I'm going to do. I'm going to show you what I'm going to do. I'm going to do the Scooby-Doo. That's what I'm going to do. I'm going to come here. I'm going to put implied volatility. See the implied volatility?
Mm-hmm.
And I'm going to look at the chart. I already know that all of these basically underperformed their estimates. Okay, so I'm good. I'm good there. So what I'm going to do is I'm going to see, for example, like right now, if I wanted to be pretty good about it, I could buy the 50, I could buy the 50/50 and sell the 50/50, and I could do this probably for about 25 cents. And I get unlimited profit potential. Not bad, right?
Not bad
Not
at
bad.
all.
Not bad at all. So that doesn't look bad. And is this volatility? Let's see, 38. Matt, is 38, 53, 50% higher than 38? Close,
No,
right?
no,
It's not, is it?
not.
No soup. No soup for us there. But fortunately, Matt gave us several others. He gave us this one.
Yeah.
Now, is implied volatility 50% higher here? I don't think so. I don't think so. The ABT. This looks like it could be. This, and it actually looks pretty good. Let's see, 132. We did the 132 for about 40 cents here. So that's what I would do. I would sell the add the money for this week expiration, and I would buy the expiration for next week. And the reason I wanted the implied volatility to be much higher, and I think here it actually may be, is because I want this to cover as much of this as possible. And I want to have a volatility crush. So I want to have
Roger. Yep.
I want to have all the edges going in my way. I want to have implied volatility crush. I want to make sure the option doesn't outperform its range, and I want to make sure I'm not getting ripped off.
Yep.
Then I'll go ahead and do a spread. Okay, so I want to make, that's the least I look at, Robert, about 42%.
That's great.
Yeah,
That's
and-
great, Roger. Just to show you took that process.
Yeah,
You know.
and here's another one. Here's another one, PGR. Okay, so here we're 238.96, so it's 239. So I would do the 240. The 240, it's a little pricey. It's about $1.30, and the spreads are wide, so I probably wouldn't do this because I want to be able to liquidate it fast. But we have the implied volatility. We have everything going in our favor with BAC, MS, ABT, PGR. Now, typically, I like to look at these. I like to look at these after 2 p.m.
I should say later in the day. Yep.
because what happens is the closer we get to earnings, the bigger the disparity in the implied volatility will be. Now, folks, can you imagine going to every option? Okay, now just want to ask you an interesting question. Think about this, okay? Imagine that you don't have data miner, okay? And you have to, and you're going to have to go to every stock that's coming out with earnings, and you're going to have to go back and figure out the implied volatility for the last 5 years every quarter and compare it to the implied volatility that quarter. And then you'll have to look and compare the implied volatility difference between the two. Now, think about doing those two things for every ticker symbol that has earnings. Do you have any idea how long it would take you to do that? Where are you going to find historic implied expected data? Where are you even going to look for that? You ain't going to have it.
Right.
It's
You're not
already
gonna
in
have-
Data Miner. It's in Data Miner, Brent. It's in Data Miner. We already added it. You're a little late to the party. We've already added it to Data Miner. It's already in there. It's already in there. Ready to go.
And the other thing is this, Roger. I mean, I'll put myself in this category. I know a number of people are just scared to death of trading around earnings. And rightly so. If you don't know what you're doing, it can be a big-ass gamble. But what
Yes.
you're sharing with us now by using a time spread, it's kind of like safe to go back in the water again.
So-
as long as you have, the criteria.
So look, guys, let me show you a little trick. So Bank of America is at $50 right now, right? If I was to sell the 50/50 call, follow along with me here, okay? If I sell the call, this expires in 3 days, okay? This expires in 10 days. If I sell this 50/50 call, how much am I going to just follow along with me here, okay? Let's do this interactively. And don't be weird, don't get me bent out of shape. How much are you going to sell this for? 86 cents. How much are you going to buy the next week's 50/50 for? $1.14. What's the difference between, thank you, 21 cents. Thank you, I appreciate that. Your net debit is 21 cents. Follow along with me here. Follow along with me here, okay? How much money went out of your pocket per contract? 21 cents. Capiche? $80.14 minus 80. Is it 28 cents? How much is it? It's 28 cents. 28 cents. It's 28 cents. I did the math myself. So 28 cents just left your pocket. Bye-bye 28 cents, okay? Now, tomorrow morning, Bank of America has earnings, okay? Okay, follow along. Just follow along with the scenario. Let's say that Bank of America for the next 3 days trades below 50.50. Okay? What will happen to this option? It'll expire worthless. What will happen to this option? It'll have 7 days left. You know how much you paid? 28 cents. Let's say next week, Bank of America goes from 50 to 55. Your 28 cents just turned into $5. What? Yes. Your 28 cents just turned into $5. How did that happen? Let's say Bank of America went to 60 by next Friday. Your 28 cents just turned into $10. Let's say tomorrow at earnings, Bank of America is slightly below 50.50, just a hair below. This thing is going to have a crush, and this thing will hold most of its value. And you know how much it'll probably be worth? About 35 to 40 cents. That's a nice little 25 to 50% return overnight during earnings. Do you see the benefit of this? Well, Roger, that sounds too good to be true. But what happens if the worst case scenario happens? You lose your 28 cents. You lose your 28 cents. Does that sound like a bad trade to you guys? We have 4 of them for tomorrow if I want to take them. 4. Oh, and our win rate on them has been over 90% win, over 90% accurate. Do you see why I added this to Data Miner and why you can't find it anywhere else? And why I added it to Data Miner? Because you couldn't find it anywhere else?
That's huge.
No, that's not amazing. That's called real. Yeah, I'll do let me do another example. I actually have time. It's okay because I want to talk about AlphaZone Pro, but I want to. It's a good time for AlphaZone. So let's just do this. Let's just do this, and we're not day trading anything either, by the way. So let's look here. This is definitely we're 40 versus 60. I think we're over 40% here. Okay, so we're good here, and we know this gives us a success rate over 90%, meaning implied volatility stays steady. So let's try it. Where are we? 155.55. Okay, let's go right here. 155. Okay. How much does this cost us? I mean, how much do we sell this for? $3.60. Rob, not a question for right now. Not a question for right now. Sell this 155. We buy this 155. How much did we spend? What's the difference between 445 and 360? What's the difference? Right? 85 cents. That's your debit. Debit. You have a debit of 85 cents per contract. Debit. You're going to pay $85 per contract. Okay? Okay? We have the implied volatility is 50% higher than I could tell just by looking at it. This is almost at 60. It's about 40. It's over 42%. Right? Yes, it is. We already know what our debit is. Now, let's say tomorrow Morgan Stanley has earnings tomorrow morning. Let's say Morgan Stanley stays right here at 155. Right here. Just stays at 155. This will be worth $2. And this will be worth $4. This spread will be worth more than 85 cents. Okay, let's say for the next few days, Morgan Stanley sells off and then starts coming back up. This will expire worthless, and this will still be worth about $3. You paid 85 cents, and this didn't go anywhere. That's a 3-to-1 right there.
Mm-hmm.
Now let's say this expires worthless, and this starts moving up afterwards. Congratulations, you've hit monopoly. You have unlimited profit potential. That, my friends, is how you trade earnings. Not like a schmuck who buys before earnings, not even knowing what the implied volatility hit rate is. If you're at least know that if you're going to do it, make sure you're at least over 50%. Do you see do you guys understand? This is a non-directional trade. This is a volatility crush. Okay? So, do you guys understand why I talk about these trades so much?
Mm-hmm.
Because they're juicy, they're cheap, they give you a limited profit potential, they give you a chance to trade in the same direction as the market maker and be with the market maker, not with every retail trader, and really make substantial money if you so choose from. So somebody asked me a question, would I stay in this trade? Make sure we keep all this for the data miner session, Matt, okay? The carving out session. So somebody who asked me, when would I decide? When would I decide if I'm staying or if I'm getting out? Most of the time, if I can get 25 to 40%, I'll just get out. But sometimes what will happen is, because I don't want to get exercised, and if I get exercised, I have to pay the exercise fee, which is like $2 per side over the weekend. Your debit is your debit. It ain't going to change. But you're going to have to exercise it. And I don't want you guys going through that. But if this one expires, I'm holding this thing out. Just depends. But think about it for a minute. You sold the 155 that expires this week. You bought the 155 that expires next week. If this thing goes to 1,000, you're protected. If this thing goes to 0, you're protected. But the one you sold is going to start decaying faster than the one that you sold is going to start decaying faster than the one that you bought. And that, my friends, is opportunity. That, my friends, is a huge edge. Okay? So you should definitely check Data Miner and use that tool. Both the tools, the implied volatility shift and the how many times it stays in the range. If it stays in the range more than 50% of the time, why would you do an earnings trade? It's already telling you your odds are less than 50-50. So at least use it for that if you're not going to even listen to the second half of what I'm teaching. Okay. So I wanted to talk about these are really the best trades. They are the best trades out there, John. That's why I keep talking about it, and that's why I put so much time into making Data Miner. If you guys knew how valuable that information is, every one of you would have like, where do I sign up for Data Miner? Because you can't get that information somewhere else. And these time spreads they're like the goose that laid the golden egg. Okay, and I didn't invent or create them. They've been around for decades. You never knew when. Remember what I teach you. You've learned the trades, you don't know context. I'm here to teach you the context because context is that 95%. Okay. Mm-hmm. Now, one of the cool things about what we're doing right now is talking about day trading. This is a great time to day trade. And a lot of folks have been asking me how to best take advantage of, we're switching topics now. Matt, we did about 33 minutes of Data Miner, okay? Yep. So if you guys don't have Data Miner, you're not going to get that information. And if you think you're going to know how many times something has hit, good luck. Please tell me how long it's going to take you to find that data. Because I can't find it anywhere, and I'm a pretty resourceful kind of guy, okay? All right. Next week, I'm going to have a special bonus time spread session for Data Miner. It'll go on about a week. It'll go on for about 2 hours. I'll do it next week, and I'll answer all of your questions about time spreads. I wanted to wait for earnings season. Guess what? Earnings season is here. And you know what's interesting? We were able to even do a lot of them sprinkled in outside of earnings season. So I'm actually able to do quite a lot of them. We've been doing them nonstop. Maybe just for the last few weeks we've off. Okay. So a lot of people have asked me a few questions, so I want to answer these questions. The first question is, how do you generate these lines? Because you said yesterday that these lines are more important than the lines that I draw. They are. They are. Let me explain to you what these lines are. These lines are implied. They're stripped out of today's expiring options on the SPY. Okay? They're stripped away from that. And this is the standard deviation of the VWAP. So what we're using levels that always take price into account, volume into account, not just price. Most folks, the biggest mistake most folks make is they don't take volume into account when they're looking at technical tools. Volume is just as important as price. I gave you guys a really good example. I like to give you the kind of examples that'll make you think and say, wait a minute, there's no way he's wrong. He's got a really good point there. Because you see, unlike other people, I actually think things through quite a lot before I tell you these examples. So for example, imagine you're using a moving average, okay? A moving average just takes the takes the closing price, averages it. So let's say that every day last week the stock closed at 100, and we take 7 days, we divide 100 by 7, and that would be the average, okay? Or 10 days, it would be 100 every day, okay? It's just the average closing price. When you bring volume into the equation, Matt, you take advantage of GE. Remember I told you earlier in weekly cash flow? Take advantage of it. Okay. Remember I told you guys that. All right. So let's just go to my example. I don't want to get distracted again. So let's say volume. Somebody buys. Let's just use. Let me give you a good. Okay, right here. This is just a simple moving average, okay? Simple moving average. Now, this moving average actually is meaningful because I'm trying to use it not to enter the market or exit the market. I'm using this moving average to help me determine if we're above fair value or below fair value. So using a moving average like that is very useful, okay? But using a moving average, these are moving averages, and this is a VWAP. Using a moving average to help me get into a trade is not as useful as using something that has volume behind it. And the reason you want to use volume behind it, because of the example that I'm about to show you. And this is about as crazy of an example as you're going to see. So just imagine this for a minute. Here, brought out for you. And the webinar we're going to have in about 20 minutes also illustrates the same example. But I want to show you this example. Here, all right, here we go. So imagine this is $100 and this is $90, okay? This is $100 right here, and this is $90, okay? So far, we're all on the same page?
Uh-huh.
Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's the high and that's the low. Let's just say that every day, hypothetically speaking, price just closes right here, okay? That's the high is 190. For the last 10 days, price has been going up and down. A moving average would just add all these together. 10 times 10 is 100, and then it would divide it by 10. The 100 divided by 10 is 10. So the average range is $10, right? But you could see the moving average line would be right here in the center, right? Now, imagine that over the last 5 days, over the last 10 days, when we add up how many shares were bought here, it was a total of 1,000. Here on this side, forget this line here. This I don't know why it got here, but on this side of the equation, here, on this side of the equation, 100 shares. 50,000 shares. Do you think that price should be equally weighted when here 50,000 traded and here 1,000 shares were traded? 50,000 shares, 10,000, 1,000 share. 50,000 shares traded here. But hey, the moving average is giving us, it's treating it the same way. You see how stupid the moving average is for figuring this out? The moving average is going to treat the upside and the downside completely equally. Well, Roger, that's crazy. How can that be? You're telling me 1,000 shares bought at 90, between 95 and 100, and 50,000 shares bought between 95 and 90, and you're going to, the moving average is giving, yeah, it does. Doesn't make any sense, right? Well, that's why we don't use it for market timing. That's why we use the VWAP. This takes into account this equation, the disparity between shares. See how the moving averages are all here right now? But look at the VWAP, where the VWAP is. Look how much below the moving averages it is. It's telling us that this is fair value, not this, not this, okay? So how does that all apply to AlphaZone Pro? Well, AlphaZone Pro uses volume in these levels right here, volume. So that's why they're so accurate, because they use volume. They don't just use price, okay? No, Bill, that won't work. Good question, but that won't work. Yeah, so do you guys see the difference? You guys understand the difference? You're using a moving average. It's taking 50,000, it's taking this volume, and it's treating them equally. Meanwhile, 5 times as much traded here between 9 and 950, between 90 and 95. If this was a VWAP, it would be like right here. This is fair value, not this. This is nothing. This is useless. Okay, now so you're probably thinking, well, Roger, you used the 200-day moving average, you used the 100-day moving average, you used the 50-day moving average, you used the 8-day. I do, but I don't use those to enter trades. I use them to determine support and resistance and directional bias. I use those because other institutions use those. We're not using them to time entries and exits. But when you're timing your entry and exit, trust me, you want to know where people bought and sold, okay? That's 2 things I've taught you today that nobody else is sharing with you, all right? Now, so let's continue. So, all right, Roger, we get it. We get these lines are very, very valuable. They're actually based on what people are paying, not just averages of some price. Now, what is this? Well, folks, this and this are exactly the same. The reason I made this, and don't joke at me, it's not funny, a lot of people are colorblind. A lot of people are colorblind, and a lot of people, I have 2 people in my family that are colorblind, and I mean, it's very common occurrence, and a lot of people don't like histograms. So what I did was I decided to take this histogram and turn it into a regular oscillator, just like an RSI or a stochastics, where you're oversold here and you're underbought here, and when this, so they're the same. This and this is the same. They're representing exactly the same thing as the same. You know what's funny? Both Ken and Penny, you see how Ken and Penny are commenting? It's really funny because you know why? Because both Ken and Penny are MIT grads. Now, I'm talking about numbers, and MIT grads are like saying, this is pretty important stuff. Think about how valuable this is if MIT grads, Penny puts helicopters together and Ken teaches math, like to people in like post-grad. Think about what they're saying in there, the value of this, if they're commenting on this. These are math people, okay? So these levels are really important because, so in short, these levels are really important because they're not based on some mathematic equation that has nothing to do with price and volume. They're completely based on prices and volume, which is why they work so well. So what is this so different about this oscillator, Roger? What is so different about this oscillator that you had to put this oscillator here instead of just putting an RSI or a stochastics, or, you've told us the 2-day stochastic is really good, RSI is really good. Why not put it in here? Well, there you go, Startup CEO. Great. Well, one of the biggest problems, and you want to write this down, one of the biggest problems that you will find with oscillators is that they, and I don't know why, but they have a built-in divergence function. Oscillators were made from the ground up. From the ground up, oscillators were made with a functional divergence. I'm not kidding. Take a look at the formula for RSI. Take a look at stochastics. Take a look at any of those things. The one I actually like, Larry Williams one, which is actually pretty cool for exits. The point I'm making is that what I did was, first of all, write this down. Divergence does not work. Write that down. Divergence does not work. I know, you've been told that it does. It doesn't work. If it did, I'd be using it. So when you take divergence out of the equation, you actually get an oscillator that's not reactive, but a little bit ahead of the curve. Now, look, nothing can predict the future. So let's not get ahead of ourselves. Nothing can predict the future. Seasonality is the best I've seen, okay? But nothing can predict the future. The two best things I've seen are relative strength and seasonality, but nothing can predict the future. Arguably, they're current time frame. They're not forward thinking, okay? And no math formula is going to predict the future. But this is about as close as I've seen to a non-lagging tool. Non-lagging tool. Now, do I use this oscillator as a primary tool, or do I use it as a confirmation? I use it as a confirmation. You're welcome, John. Matt, did you do anything with that Bollinger, with the GE trade?
Yep.
All right. Did we make any money?
Yep.
All right. Good. Lag is a drag. I like that, Michael. I got to get a t-shirt that says that. Lag is a drag. That's pretty cool. Okay, so now you guys understand the power of this. Now, in addition to these tools, what I did was I also added, you see the arrows? The arrows don't just come up anytime we feel like it, or anytime the arrows occur, and they're not nearly as important as the levels. And I keep telling people that. The arrows are not as important as the levels. The levels are more important. So when you get an arrow with a level, it's much more important than just getting an arrow near a VWAP. So what this level does is this tells you that you had a reversal bar, 20 bar high, reversal bar next to a line. Three things confirmed by this oscillator. So here, look, see how you got the arrow and see how we started coming off like 15, 20 minutes later? That's a confirmation. So you want this to confirm this. This is by far the best tool that I've seen for day trading. It took me 3 years to work it out in my head before launching it. Bugs yesterday sent me a note that he was up 300 something thousand. Let's see if I got anything from Bugs. I just got this from Bugs. That's from yesterday, 354K. So I'll check this after we're done with this webinar. But I promise you, it's a really, really good tool. Michael says, so we have no confirm of a short until MBD. Yes, that's right. A lot of people have asked me about T512, and I'm gonna talk a little bit about that. That's what Bugs uses. He uses the T512. We use the 5-minute bar. Some people like to use the 2-minute bar. But I'll tell you what T512 is. It's not a mystery. But I'll tell you what it is. There are two ways to see price data on charts. Let me show you. Boy, we're having a good lesson today, huh, Raleigh? You're muted. You're muted.
Yeah, this is a great section, Roger. And the questions that are coming up here are spot on. People are very engaged.
Exactly.
Very engaged.
I like that. I like when people are engaged. So let me tell you what a T5212 is. What you're looking here, every bar here represents 5 minutes. Okay, look.
Mm-hmm.
See, it says tick. So Bugs has his charts set at 512 ticks. Every time there's a trade, every time there's an executed trade, that's a tick. Anytime he has 512 executions, he gets a completed bar chart. Some people like to use 800. There's different number variables. 512 is really short term. That's very scalpy. It's like using 45-second bars, 1 minute bars. So if you want to use, so that's what it is. 512 T is 512 ticks. Ticks. 512 trades. Let me just check something real quick. One second, folks. I just want to be a nice guy and my civic duty. One second. Yeah. One second. We're almost there. Wanted to give people a nice little profit today in the pit for being patient. Taking a little partial. If you're in the pit, take partial profit on GLW and then put the stop at break even. Okay. All right, good. Cooking with gas. See how nice of a guy I am, Bob? Even though I tell you to take trades on your own, I even give you exits on them, on bonus trades. I got to say, I'm a pretty nice guy. Okay, so let's go back. Sorry about that. You're welcome, Matt. So I think we got this part covered. Now, I want to have a serious discussion with you about your trading, what you guys are trading. A lot of folks have asked me about, Roger, when should you trade E-minis? When should you trade options? When should you trade 0 DT options? When should you trade 1 DT options when you're day trading? So I'm going to answer these questions for you. And then we're going to have a little class on this topic where I'm going to, everything we talked about, it's going to be presented to you in different formats so you'll be able to reinforce it, which I think is very important. All right. Matt, can you do me a favor?
Yep.
Thank you, sir. All right. So, Startup CEO says first time in this room, and I don't think I'll miss any more sessions. That's a good idea. We get about We get about 800 people in the morning, and then 1,500 through the day. So a lot of folks come here. All right. So thanks, Matt. So let me explain to you when you should use options, when you should use 0 DT options, when you should use 1 DT options, and when you should use micro E-minis, okay? So, and this is just for educational purposes only. I'm not making any recommendations or anything like that. So, the biggest question you need to ask yourself, thank you, sir. Biggest question you need to ask yourself. First question you ask yourself is, what's the VIX doing? What's the VIX doing? Mm-hmm. Is the VIX near 20 or is the VIX near 10? It's not ever going to be near 10, but is it close to 20 or is it near 15? If VIX is not really doing anything, and VIX is calm, and VIX is and VIX is right here, in this area right here. You're welcome, Adam. You're welcome. 14, 15, even 16 around here. Basically, it's not exploding. It's not moving like this. Oh, by the way, this is a good sign. It's a very good sign in the right direction that markets are gaining strength again. Okay. So, sorry, I didn't mean to interrupt myself, but this is good. This is really good for the market. This is positive. So, if you see that VIX is below 20, so even right now, it's still near 20, like in here, below the 200-day, like right here in this range, you can go ahead and do options. Options, not a problem. Problem's going to be when the VIX is spiking like this, a $2.50 or a $3 option on the SPY Arnulfo, my suggestion is for you to pay attention because what I'm talking about is exactly what you should be listening to right now. So your premium on your $2.50 option is going to be $4, $5. It's going to be expensive. And a lot of that movement that you're looking to get on that option is going to be already priced into that option. You know why? Because options price in the expected move. We just spent half an hour, we just spent 45 minutes talking about that.
Yep.
See a common theme, how everything we learned here also applies here? Options price in the expected move. So if the S&P is expected to make a big move, common sense here, common sense. If the S&P is expected to make a big move, VIX, the add the money options on the SPY, which is the VIX, are going to be inflated. They're going to be inflated because they're going to be pricing in that bigger move. So buying options on when you're day trading the SPY using the Alpha Zone Pro is not the best idea because you're going to look for a move like you're going to look for a move that goes from here to here, and your regular $3 option is going to increase 50 cents, but because of the implied volatility, your $5 option is only going to increase a quarter. And I'm giving you a pretty good example. Do you see the difference I just gave you? A $3 option turning into a $3.50 option versus paying $5 and only seeing it go up like 20 cents. That's the difference between buying an option when VIX is here versus up there. Now, granted, it doesn't happen very often. Yeah, the house doesn't want to lose. Exactly, Michael. Exactly. So my suggestion for you is you trade the Micro E-mini, Mr. Arnulfo, because there's no implied volatility. You're not trading an option. It's like trading a stock. There is no implied volatility. Duh. And remember, you could trade it with any broker. Okay? Now, the only downside of trading the Micro E-mini with a stockbroker is that you're going to always be margined overnight, which is $2,500, but there won't be any day trading minimum requirements.
Right.
You see what I'm doing? There's no free lunch. On the other hand, you can go to a futures broker like Ninja or AMP or dozens of others you could find online. I just gave you the biggest ones. And you can use day trading margin. Now, caveat, they're not stupid. So when implied volatility increases, they will increase their margin too. But that's only when like there's something happening like what happened. It happens twice a year, 3 times a year. So be prepared for that. But no day trading requirement, no implied volatility. Roger, what about if implied volatility goes down and it goes back to 15 and everything just comes back and everything is conky-dory? Trade the 0 DT option till 11 a.m. and then trade the 1 DTE option till the end of the day. I personally prefer 1 DTE all the time. Matt, he flies close to the sun. He likes his 0 DT in the morning. Okay, so again, how you play that, you can experiment with it. But now, what I'm going to do right now is I'm going to give you a presentation that encompasses the last 30 minutes of what we discussed, including all those levels, what the oscillator does. We did it yesterday, and we're doing it today. And I believe today will be the last day I'm doing it live. I don't think I'm scheduled to do it live anymore. My suggestion is for you to pay very close attention, because if you missed some of the stuff, we're also going to have a Q&A session where I will explain a lot to you. Now, before we begin, I've been teaching you. I haven't really been paying too much attention to the market, except taking 2 profits while we were here live, right? I haven't been paying too much attention to the market, except for taking 2 profits while we're here live. It's pretty funny, right, Raleigh?
Yeah, I know.
It's an oxymoron. I haven't been paying too much attention to the market, except for the 2 profits we took live in the last hour.
Well, the SPY has been taking off like a rocket.
Yeah, you see how we're touching this area? Mm-hmm. I want the meat of the candle to come into this area. That's what I want. Otherwise, this will be a top just like this. and we don't want to see that. So just something to keep an eye on over the course of the last hour, okay? I just gave you guys a lot of red meat, okay? I mean, I just gave you a lot of